Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by Prodigy Finance founder and CEO, Cameron Stevens. Great to see you again, Cameron, and thanks for ironing the shirt.
Elliot, it's wonderful to be here. I'm glad I could listen to the instructions, which said neutral background. Hello, birds of paradise. And the shirt, okay, maybe not iron, but I feel like it's possible.
It's all good, it's all good. So look, before we get cracking, Cameron, we're going to learn a little bit more about Prodigy Finance. Okay, so Cameron, at its most basic, you offer student loans for international master students, but where does the tech come in? What's the fintechy part of all this?
Sure. So I think if you think of a domestic context in the US, it's easy to get a student loan. If you're a student from an emerging market trying to go to a top quality university, it's almost impossible to access the funding to go. So this particularly affects people who otherwise have no option, who've been accepted into a top university, and finance is the barrier to stop them paying. The tech and the challenge in that is, how do you think about risk assessing someone from 140 different countries when the data is heterogeneous? You don't have access to a centralized bureau. When you're trying to make a predictive decision on someone's future earnings potential, because many of the people that we fund who have no other option don't have the family wealth or the income to be able to support the loan now. So you have to predict what they're gonna learn, what they're gonna earn in the future. And that requires a lot of data modeling, tech, or machine learning models on risk to assess that. And then you've just got a disaster zone, because as much as fintech, as much as the world is going global, and sometimes you don't think that with Trump and Boris, but as much as the world is going global, still a lot of the infrastructure around fintech is very nationally orientated. So payments infrastructure, legal, regulatory, etc. So you have to think about building the infrastructure to enable payments globally, to enable a legal and regulatory model globally, and that just doesn't fit into the current models today.
And I guess, Cameron, your pitch to investors and potential employees is not, hey, we're just lending money to students to help them study where they otherwise might. It's that you're really going to be having an impact on people's lives. This is like an impact investment, right?
Completely. So the vast majority of people we fund don't have an option, as I said, and we are all about saying we think talent and potential is evenly distributed around the world, but access to finance is not. And we're trying to change that. So we focus, and we have our impact report actually coming out quite soon, in which we did fairly detailed data deep dive into understanding really our impact and quantifying it. But we fund those who otherwise don't have options, but have enormous potential. So it's really about sort of unlocking that human potential in emerging markets for people who otherwise wouldn't be able to attend these amazing universities.
And can you give us maybe some numbers around Prodigy Finance in terms of the money raised, in terms of equity, in terms of debt financing, maybe revenues, maybe profitability, or at least your path to it?
Sure. So we've originated to date about $1.5 billion to about 28,000 students around the world. And I think just in terms of so if we think about business KPIs, we think about how much we're lending to how many people. We think about clearly revenue and profitability. And what I will say is, for the first time in our history, we were EBITDA profitable last year, and we'll be profitable again this year, which is a big milestone after more than a decade of it. But it's something we've really focused on since 2020. Was a difficult year for us and many others, but we had to really think about that in 2020 and 2021. And I feel like we're ahead of the curve given the macro environment. And then just in terms of what we see as some of the impact of that, so 90% of the people that we fund have no other option. 96% come from emerging markets. You see salary increases before and post graduation of 4 to 5 times. We fund majority engineering and STEM students now, sort of comp sci engineering, etc. So that's a little bit about us. We don't disclose revenue numbers, but I can say that we're profitable. We're growing at sort of 60% plus year on year.
Right. Well, we can see you can afford Bird of Paradise wallpaper, so obviously things must be going well. But look, Cameron, as you said, like pandemic must have been very challenging. What with travel pretty much grounded. I would imagine far fewer people were traveling for their studies. But we need to move on to the next section. It's just one final question in terms of Prodigy Finance itself. Obviously, we've got an environment where interest rates are rising, which I guess part of the idea is that it reduces demand for borrowing. Am I right in assuming that with an average APR of around 10%, according to your website, on your loans, that this affects you less?
It does, because I think the main point for us is the loans that we fund are really an investment in someone's future, which gives them a very high return on that investment. So it's not sensitive to that, because the difference between a few percentage points makes very little difference. We make conservative affordability decisions when we grant the loan, and to make sure that the person can afford it after graduating. And really, the difference in a few percent is not going to be the make or break against that. And equally, actually, it's more about the size of the loan and the return that person's going to get in seeing that salary jump so significantly post-graduation. And therefore, it's much less sensitive to interest rates, even fairly significant interest rates, which I think we're going to see in the next while.
Right, and I suppose also, even when we are in a recession, or people think they're heading to a recession, that's sometimes a great excuse for people to go back to school and to study, so that when things recover, their earnings will do.
Exactly.
Likewise.
I think on the origination side, more people go and do an education or a master's degree, and then on the other side of that, in terms of people that we've lent to already in the sort of portfolio of people, what we find is very, very good employability through downturns. So we see that in the data for master's level and higher, significantly higher than the general population. And we also see that in our own data. So through COVID, we saw fantastic performance through, we launched into the original financial services downturn and saw that as well. But what you see is very good employability through downturns as well. So I think in terms of recession proof on both sides of the sort of origination side and then on the other side of the servicing, we're in a good place at this point.
Great. All right, so look, we've heard about Prodigy Finance. Let's now get to know Cameron a little bit better. So Cameron, most people I think do an MBA to give them the tools they need to start to run a business. But your application for a loan to study, I think at INSEAD, was kind of what inspired you. It's almost as if you received the best lesson before you even began. And I'm also reading just the other day that a lot of MBA students are getting job offers just by virtue of the fact that they've been screened and approved to study at great institutions. It's almost as if the MBA doesn't really matter anymore, but the journey to getting it or applying for it can really set you going. Do you think that you'd have be where you are today if you hadn't applied for the MBA? Could you have done it without the MBA, but perhaps you needed the inspiration in the application process for the MBA, if you see what I mean?
I think certainly the Prodigy journey has been one of some passion, and that was definitely sparked by my personal experience of trying to get a loan from HSBC and thinking this is absolutely incredible, and I couldn't go. I turned down my place the first year, and then I got accepted again the next year. And luckily for me, I managed to cobble it together that next year. So I think that was definitely inspiration. But in terms of the degree itself, for Prodigy, I think it was fantastic. It gave us, our early angel investors came from the network. We were able to build a community out, which I think clearly would be possible without it. But was incredibly helpful in the early stages. We had a lot of sort of community support of people who wanted this to succeed, and many people who thought it was a crazy idea to think about a global platform across 140 countries. But I think that community coming from the MBA network was incredibly helpful for Prodigy and for me, definitely. An interesting side note to that is I think now we are now majority engineering and STEM more than business from the roots in which we started. So we fund more computer science, engineering, etc. Today than we did at MBA. But I think what you do see even for the MBA side is that access to an amazing community and a network, whether you're starting a business, whether you're going on to look for a career change in something or a change in geography, that still holds valid. And we do see decent outcomes coming out of those schools. But we see potentially even better outcomes coming from the engineering and STEM fields, which is interesting.
You've told us already, Cameron, that the last couple of years have actually been pretty good for Prodigy Finance. But one imagines at the same time there's been a lot of challenges, especially when the pandemic first hit and lockdowns were first imposed, and I guess no one really knew what was going to happen. What's been the toughest day on the job for you, and how do you think you could have handled it better?
2020 is definitely a year I wouldn't repeat. And interestingly, it's not for the reasons you might guess. What we actually saw was students still went to study. The universities were actually pretty responsive in going hybrid or online. And so we saw our demand continue throughout 2020, and we didn't actually have any fall off in demand. But what happened for us was we had an intense funding squeeze in the business in 2020. We had a plan in which we were going to do our first rating and securitization in Q1 of 2020, and we had to pull that. That meant that all of our funding for that year was suddenly constricted, as well as we were doing the last tranche of an equity round at the time, and one of the investors pulled out because of the Mac event. So we had this incredible, intense pressure hitting us in Q1 on the business, on our funding and equity side, on the funding platform, while we were seeing so frustratingly so much demand that we couldn't meet it, and that had implications for us. And we had to look at our cost base at that time as well in 2020 because of that on the equity side, and right size the business. I think that was incredibly difficult to go through. And the team was incredible in the process. And I think we still get messages from people rooting for Prodigy, but that was a very, very difficult process. I think in hindsight, how could have I handled that better? That clearly the strategy that we had on the funding side of the business was finely tuned to market risk. And we were taking way more than we had previously in the past. And we constructed our strategy around a good market versus a severely stressed market. And I think a little bit more planning, or a significantly more planning, not to say we could have predicted this, but some more planning around that side, stress cases, and how you think about that would have been helpful compared to my normal optimistic view on things.
Right, and of course, it's not just business challenges that you faced in your life. I think you've had some personal challenges as well. You told me you couldn't speak before you were something like 3.5, which would be hard to believe given how eloquent you are today. How honestly, I mean, tell us about that briefly if you can, and kind of, what does that kind of make you show that you are the kind of person that can kind of get over challenges, whether they're personal or professional?
My brother, his favorite toy was a little telephone, which he would ring up and just speak to no one on it. It was not attached to anything. And he would just talk continuously from about 8 months. And then I came along and basically I grunted for 3.5 years. My parents thought, no, there's clearly something wrong here. And they went to some specialists, couldn't work out what was going on. And then I just started talking. So clearly it wasn't, in those first 3.5. I wasn't interested in engaging too much, and I'm not sure. I'm not sure what changed. Obviously, not in my memory at that phase, but must have been something that suddenly piqued my interest. But thanks for bringing that up, Elliott. I appreciate it. I feel like this should be two-sided, and I need some more ammo on you.
Well, I think we've definitely got the promo clip there now. So look, Cameron, a key part of this interview, of course, is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Prodigy Finance CEO and founder, Cameron Stevens. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, now Cameron, let's talk about the future of finance. Okay, so look, we've got soaring inflation, we've got rising interest rates, we've got fears of a looming recession. How do you expect this to affect fintech lenders? Because many weren't around during the last recession, so they haven't really had to kind of see the stress on their balance sheets that a recession and the macro situation that we're in can bring.
I think it's going to be a very challenging time for people in which it was fairly marginal against the utility. And what I mean by that is some of the hype around buy now, pay later and models like that, in which you're effectively encouraging consumers to take on additional debt for without being pejorative about it, consumer goods that they may or may not need. That can work in a very friendly environment, and even in that friendly environment, I think it's a challenging model for me in terms of thinking of societal impact. But I think when you suddenly put in a recession into a general consumer population, you put in rising interest rates, as you say, and loans where it becomes more marginal, unlike our population, to afford those loans. I think that's a recipe for disaster. So I think there's going to be some significant reckonings on the market model of lending, where that lending, in my view, is more about fueling consumption than it is around fueling an investment. So, investments in a mortgage, investments in education that's going to stand you for the rest of your life, etc. So I think there'll be challenges there fundamentally, and then clearly the capital raising situation is getting tougher and tougher. And for those who are not profitable or have built a growth model in which they hope one day to be profitable, the chickens will come home to roost, because they won't be able to tap into deep capital pools, and a lot of the very aggressive funds are not in the market. So I think you'll see a shakeout of a number of models, and you'll start to see who's resilient coming out of this, and who's built a model that's really going to last, both from a sort of market fundamental side in which the model has utility for society, and from a company side in which they can survive through these next the next bit of choppiness, which is already on us and seems like it will last for a while.
And in short, Cameron, we should expect to see bad loans rising for people in that space.
That's a much more succinct way of saying it, Elliott. Clearly, I'm still making up for lost time from my first 3.5 years in putting in the word. But yes, definitely. I think on the margins, you're going to see significant rise in defaults, and a lot of pressure on some of the models where it's very slim margins and very slim affordability decisions that have been made.
Okay, and I think Sequoia was earlier this year talking about startups needing to expect the downturn to be long, and for companies to cut costs and focus on profitability versus growth at all costs. I guess you said you're EBITDA positive last year and this year, but are you? So perhaps your investors are not pressuring you, but from what you're hearing in the space, are you getting that sense that investors really are, turning their thumb screws to try and shift from this growth at all costs idea?
Most definitely. It's a conversation in every board meeting, in every company. I think the writing is absolutely on the wall, and these things can change clearly. In the macro situation sometimes changes, but this one does feel like it is going to be something different and something longer. And I think everyone is absolutely preparing for a longer and more severe downturn. So yes, I think that's the case. And just I said 2020 was horrific for us, but thank God in hindsight it prepared us for what was coming, and we actually had to take the moves that Sequoia and many others are suggesting, about really tightening your business model, unit economics, your cash flows. And we had to do that through 2020 and 21. So we're well positioned now, but it wasn't great foresight on my part. It was forced on us at the time. So I can't take huge credit for that.
Well, you got through it, so I guess you take credit for that. But Cameron, look, you're based in London, or at least Prodigy is, if I'm not mistaken. You've been through Brexit and all manner of other challenges, the pandemic, and now rising inflation, interest rates, everything else. Travel being grounded. Has Brexit made any difference to you at all? I know we've kind of moved on from this discussion, but you're still there. Does it make any difference to an international fintech whether the UK is part of the European Union or not?
In some specific areas, it absolutely did. Our ability to target alumni, so much of we have a alumni crowdfunding program and a bond program, which became infinitely harder to distribute across Europe. So in some specific ways, yes. In others, it's actually meant that the FCA and the regulator, which is a very good regulator, the UK financial services regulator, they are very supportive of the fintech ecosystem, and it gives them some more flexibility to be able to do things. I don't want to sound at all like I'm a Brexit supporter, which I'm most definitely not. But that would be one area which I think has been a unexpected bright side.
Okay, and briefly, if you can, Cameron, we used to talk a lot about the war for talent. We've not been talking about that much of late because we've got hiring freezes and the like, people laying off staff, especially in the fintech and other technology areas. If you're growing and hiring, is now the best time to be recruiting for a smaller tech company like Prodigy or anyone else in the space?
I think it is a great time because, well, there's two things in this. One, I would say that we still continue to see that war on talent happening at the top end of the market. And I'd also say, secondly, it's incredible how salaries have globalized and how fast that's happened. So you're seeing offers for people in India and other countries, which are, getting to on a par with your traditional expensive hubs, because they are getting offers from multiple companies, and that's accelerated faster, I think, than anyone expected. So that's been an interesting point. But we certainly see the competition in there. But then also you have a lot of people, Klarna laying off a significant number of people. And I think just generally people thinking about what is going to be sustainable. And from our side, what we found, at least, is we are a very mission-driven company, and impact is really important to us and to our team. And people who join us generally share that same view. And I think it's a differentiator. We'll see. We've just hired a number of people in the sort of product and engineering space, and that was a big draw for them as well. We have a remote distributed culture, but being part of something in which they can really believe in the mission is important. And I think that's going to become increasingly important. So I don't think the war on talent will abate. I think it's going to still be there. I think you can get great people, but I think people really need to buy into the mission of what you're doing as well to really want to join.
Right. Okay. Well, look. Time now, Cameron, for our round of rapid fire questions. Are you ready?
I doubt it, but I'm going to give it my best shot.
So look, we talked already, a lot of fintechs are still losing money hand over fist, a lot of the ones that we know. Is it a problem that they're money losing, or is this something we should be worrying about?
Bankrupt.
What fintech segment has the biggest potential over the next 5 years?
Anything with impact, and I think there's going to be some significant blockchain innovation, not in specifically crypto. So that wasn't one word. Let's go.
What is the biggest pain point in your everyday financial life you'd like to see resolved?
I would like to never deal with some of the big banks again. So once the banks are removed from the market, I'll be happy on all of them.
Do you think we're at the beginning, middle, or end of the fintech wave?
Early middle.
Do you have a metaverse strategy?
Late beginning, early middle.
Do you have a metaverse strategy, Cameron?
We do not. We've been testing out some remote meetings, but we don't have a metaverse strategy, no.
All right, I'm going to jump to the 1 to 10 question because we're running out of time. 10 the highest, 1 the lowest probability of the following happening. So how likely is it that one of the neobanks will be as profitable as a top-tier legacy bank over the next 10 years? 9. CBDCs, central bank digital currencies, will become a mainstream reality in the US and EU?
6.
That you'll be able to open a crypto account at a top... Oh, there's the bell. Oh, I've started, so I'll finish. That you'll be able to open a crypto account at a top-tier bank in parallel or instead of a classic cash account.
7.5.
7.5. All right. Well, on that nuanced note, I'm afraid we're out of time for our rapid fire round and for our conversation as a whole, which is a shame because I always love chatting with you, Cameron. So thank you so much, Prodigy Finance founder and CEO Cameron Stevens, for taking the time to speak with us today.
Brilliant. Thanks, Elliott. Lovely to be here.
Thank you, and we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. See you next time. Bye-bye.